Very much indeed, because you see, if the shares go few pence up, you either make thousand depending upon the amount, or lose thousands and thousands. But where I was supposed to make a huge amount of money, they didn't sell it because it wasn't 1 penny, 2 penny. It was about 50 pence a share, and the shares were about worth about £250,000.
You can challenge the order, and I'm sure, through your transcript, and if that was recorded in the transcript, you have absolute...
Well, I have, but they said we tried it about 9 times, and we couldn't sell it. I mean, that I don't accept that.
But then you can ask for what, it depends. You can ask for a time and sales. They should give you a record of time and sales. And that because every transaction that has taken place in that stock is recorded at the exchange, so you can call for that time and sales records.
Thank you very much indeed.
Thank you. Caller. Now, okay, we've got another caller. We've got a queue of callers online. Assalamu alaikum, caller.
Hello.
Assalamu alaikum. All right, can I get your name? Where are you calling from?
Hello.
Yes. Hello.
Walaikum salam.
Yeah. Walaikum salam. Right, just don't watch the TV, lower the volume and just speak through your phone here.
Walaikum salam. I'm calling from London.
Okay. What's
and
your
I'd
question?
like to ask a question to the three brothers tonight. What advice would you give for a young entrepreneur, Muslim entrepreneur, to succeed in any business?
Right, okay. Well, yeah, tonight's show is really about the stock market and investing in the stock market, and we're covering the very first launch of an Islamic stock exchange, a halal stock exchange. But I can ask, I mean, what do you think? What kind of advice can you give generally about a young budding entrepreneur? And
basically, in entrepreneurship, okay, this is a risky thing. For young guys, in general, my advice is that don't try to be too entrepreneurial. First, get some experience of doing something. Once you are comfortable of doing something, only then enter into entrepreneurship. And I'm sure after getting the experience, if you do something, you will make a lot of money.
Excellent. Abdi, you seem to have a background in entrepreneurship, so give us your insight.
I always encourage entrepreneurship, and in fact we should encourage from the youth. And my advice to my brother is have a good business plan. Make a business plan, research on your products, research on your market. If you don't research on if you don't do the basics and you don't do your business plan, then that is it's more riskier. So reduce your risks at the outset and start proper planning at the beginning.
Excellent. Now, just getting back to the stock market again, we had another caller. Unfortunately, they couldn't all get through at the same time, so I made some notes. People want to know, how does the share price, how is it determined in a market? I mean, like, let's say, what makes a company worth £1 a share, and then what makes the price go up or down? What affects the price?
There is a number of issues that determines the stock price. Firstly, the company itself. The fundamentals of the company. What are its assets? What is the business model? And what are its cash flow situation, etc. So the fundamentals are very key. The next thing is, which sector is the company? So, for example, if you're in the property sector, even if you are doing well as a property company, and in this market, nobody would touch a property company. So that weighs. So it's called sentiment. Sentiment is very important when it comes to the pricing of any issue. Thirdly, the macro look at, if you look at the entire economic situation on a global basis, there are many things that could be, if you have a bull market and everybody is in a very positive mood and nobody is concerned about taking risks, you're suddenly going to find that the company's shares will be probably overpriced. Okay. Then you have something called romantic value. As stock market jargon we have, is people, are romantically attached to a particular sector. Like, for example, now anything that is green is in the scene. So all you have to say is, I've got some green technology, and everybody is willing to bet their bottom dollar on it. In the 90s, you had biotechnology. If anybody said I was creating something unique in biotechnology, everybody would pour money in. So that's why you had stocks just going through the roof that had nothing to do with the fundamentals of the company. So determining a stock price is very difficult and very easy. So, you know, you have two sides of the coin. So a very professional person will be looking at the price of the stock from all these aspects. But most importantly, you're also looking ahead. So, for example, why is the stock market being pretty buoyant in the last 3 to 4 months in spite of all the negativeness that we have around the world? Purely because people like Warren Buffett, who are great investors in the world, they're looking ahead because they know that there is a sustainable economy ahead of here, because today we have, it's sentimental, very emotional. All these things that are happening in the market are effectively more to do with emotions than fact. This world is going to continue to grow. The population is going to continue to grow. The demand is going to continue to grow. So you should always look long term rather than short term. The traders look short term. The great investors look long term.
Okay, excellent. We seem to have a lot of private investors asking questions here, and one of the callers, he was actually asking what is like potential earnings, yield growth, and net asset value, and how does that affect the price? You know, because that's the way people determine. These are the sort of tools they see in the newspapers. So they're saying, right, okay, what really?
Okay, let's take one.
Maybe you can sort of like define what net asset value, NAV, PE,
net asset value.
Newspapers stuff.
When you have a fund, for example, you look at all the assets inside that fund, and every day they actually have a net asset value declared in the case of a fund. Okay, because everybody wants to know what are the assets held behind that fund, whether it's a property fund or whether it's an equity fund. So there are companies that calculate the NAV on a daily basis. So that's a net asset value. So effectively, that is the value. If they want to dispose that company, that would be the net asset value.
And is that what makes up the share price? How much is floated in the market?
On the fund. There's nothing to do. So those are values calculated when it comes to funds. So let's not confuse a fund valuation and an equity valuation. An equity valuation, a net asset, we don't use an NAV on an equity as such. You know, you have the market price and you have the market capitalization, etc. You have something else called book value in an equity, which is effectively what are the net assets. Like, for example, you take the studio, you know, if you dispose this company off, what is the net assets? And without taking its goodwill. So that is basically what a net asset in a balance sheet is.
Okay, and the other side of the question was like, you know, potential earning P's. You see that in the newspapers and yield growth.
Potential earnings. Now, I talked about you invest long term. So a company would project earnings next year, the following year, and the year after that. So those are called potential earnings. So what happens is, if IBM is projecting that it's going to earn 50 cents in 2012, that is called the earnings, projected earnings. So PE will value, they'll take the number of shares and multiply it by 50 cents and say that is the valuation going forward. So that is the PE ratio, whether it's 15 times earnings, 10 times earnings, 20 times earnings. Traditionally, companies are trading roughly between 10 and 15 times earnings. When you see companies like Google could be 35 times earnings, iPhone could be 35 times earnings, purely because these are dynamic growth companies which have got products that we don't know what is going to happen when they release those products. So that is what you call unquantifiable earnings. So that is why these companies are selling at such huge multiples of their earnings.
And what about yield growth? How's that?
Yield growth is for sukuks or bonds. That is the yield to maturity. So if you buy a bond today and it gives you interest, it will calculate until the time it matures how much interest you're going to make. So that's yield to maturity or yield to date or whatever.
Right, okay. Now question, you want to ask a question, Abdi?
Just to add, I just wanted to ask Mahesh, I think he's the expert here.
I'm not, but
in the stock market that's being developed, would you be having the bonds as well, or is it that will